Namaste. Good morning. We start the class with income computation and disclosure standards. Income computation and disclosure standards. Okay, popularly abbreviated as ICDS. Okay, there are 10 standards which are released, okay, by CBDT. Okay, accounting standards gets released by ICAI or the new accounting institutes or the international bodies. This is issued by CBDT. Okay, applicable for computation of income under PGBP or other sources. Okay, applicable for all assessees except individuals and HUF whose books are not to be mandatorily audited under 44 AB. So, not applicable for tax audit cases for individuals and HUF. Otherwise, all assessees it is applicable. Am I clear? Okay. Where do you disclose this? Income computation, that we know. Where do we disclose this? 3CD. That's a questionnaire where we are answering that questionnaire. So, first, let me ask you, or rather, I will write and ask you. This is applicable for books maintained under income tax law. Okay. Section 35 AD. If I am doing a specified business and non-specified business, for specified business, I need to maintain separate sets of books. ATI, separate sets of books. In various sections, the law says separate sets of books. Have you seen books of accounts as per income tax law? No. Okay. We don't have as per accounting, as per book, as per. Okay. So let me break the myth. No, you have seen. Okay. Our income tax adjustment statement is known as books of accounts. The adjustment statement which you prepare in your office, okay, the income memo, add inadmissible expenses, which means as per books I have claimed something which I am disallowing here. Allow the following. I compute the depreciation in a separate way and allow that depreciation, disregarding the book depreciation. So, income tax books is an extension of accounts books, where in accounts books I am disallowing something and allowing something extra under income tax. Okay. Okay. Income tax statement of computation is regarded as books as per income tax law. Disclosure is in Form 3CD, not applicable for income computed, not applicable for income computed as per 115 JB book profits or 115 JC adjusted total income. Okay, friends. So not applicable for 115 JB. I'll tell you why it is not applicable when we come to that relevant sections. Okay. Now, as I was telling in the general class, it is getting integrated into income tax law itself. Slowly, ICDS will go away because income tax law itself has these provisions. We will see what it is. We start with ICDS 1, accounting policies. ICDS 1, accounting policy. Fundamental assumptions are going concern, prudent, and mercantile base. Fundamental assumptions are going concern, prudent, and mercantile basis. We don't go there by that concept of materiality. For 10 crore industry, some 20,000 rupees is not material, accountancy says. But for us, it is 6,000 of tax. Okay, why will I even lose it? So, materiality is never a concept here. Accounting policies can change if there is a reasonable cause. Am I clear? The policies can change if there is a reasonable clause. What is reasonable clause? Yeah, that is accountancy. Yeah, I accept. Accountancy says accounting standards can, accounting policies can change if the new policy will make the financial statements more true and fair. If it is mandated by law, like that, they have given three sets of items because here accounting policies can change if there is a reasonable cost. What is reasonable cost? Accounting policies will change if there is a reasonable cost. I'm nowhere checked. They have not defined reasonable cost. Neither in income tax law nor they have just said, okay, you will understand. and they have left it as it is. ICDS 2 inventory, same like our accounting. Here also, there also AS2, here also ICDS 2 inventory. For goods and services. Interestingly, ICDS 2 covers services also. Interestingly, we are covering the service sector also into this. Okay, accounting standards does not speak about service sector, but here we are speaking about service sector also. First, for goods. Okay, for goods. Okay, cost or net realizable value, whichever is less. For goods, same, cost or net realizable value, whichever is less. Cost includes all components. Cost includes all components. You know, direct material, direct labor, direct overheads, apportionment of fixed overheads wherever possible, okay, or net realizable value. Now, one important aspect which is being often questioned, borrowing cost with regard to stock, will it be capitalized? Yeah, it's not fixed assets for inventories. Okay, and this is where ICDS makes a small difference. Normally, no, I all agree with you. But where the inventory takes more than 12 months to become a finished good, where my process time is more than 12 months to become finished goods, in that case, borrowing cost has to be capitalized. So this is a very often asked adjustment where when will in inventory borrowing cost will be in fixed assets, as we have already seen, as she said, till the date of putting the asset into use, it should be capitalized. For inventory, there is accounting standard does not say anything, or accounting standard says it should be treated as revenue. But here, borrowing cost will be capitalized with the cost of the asset if the process period to make it as finished goods is 12 months or more. Okay, if it is 12 months or more. So uh, even in construction, it is so, because all your houses are going to be stock in trade. So you take 4 years, 5 years to complete construction. You have to capitalize. Liquor industry, longer the gestation, greater the value. So they keep wine and all for years, multiple years together. You have to capitalize. Okay. So in all these cases, borrowing cost will be capitalized if it takes 12 months or more. Okay. In our examination, how the question are. The associate took a loan for so much amount for purchase of inventory, and the inventory might take 15 months, 20 months. So I will compute the inventory value, the cost, add it both to the opening stock, whatever is the opening loan, and closing load, closing stock. This is one type of adjustment. In the recent examination, they asked, assessee has uh, included in the opening and closing stock 1,40,000 and 1,70,000 of borrowing cost, since it takes 6 months to convert into finished product. No, it should be considered. ICDS says only two. So you should reduce the opening stock, reduce the closing stock. That's how the adjustments are coming. But this is a very popular adjustment with regard to borrowing cost. Okay. Retail price method and batch costing method are also accepted for industry specific cases. So for many shops, etc., MRP minus profit, they consider it as cost. And batch cost, okay, these are also accepted. For services, expenses incurred till the are completed should be treated as inventory. So this is new. Suppose let's take a car comes to the showroom on March 10th for servicing. The car had a bad accident or the car is not in good shape, so it has come. So it will take 2 months to make it ready. Up to March 31st, whatever labor, I need to maintain rules accordingly. Labor, consumables which are used should be taken as closing stock or closing work in progress. It should not be. So even for service sector, ICDS is up. One of the fundamental accounting principles we know is going concern, my dear friends. Okay. So when that is being questioned, that is when it is not going to be a going concern, our standard says stock has to be valued at NRV only, not on cost or NRV, whichever is less, only NRV. In case of dissolution of firm or closure of entity, inventories needs to be valued only on NRV basis. Online friends, are you all following? Shall I? ICDS 3, contract. Percentage of completion method. We have to follow only POCM, percentage of completion method. So let me take that the contract value I predict comes to 40 crores and income from that contract will be 50 crores. So 20 crores of work is being completed So 50% is being completed. 50% should be taken as income. 50% should be taken as income. Suppose 4 crores of work is only completed. Okay. This standard gives me one benefit. Early stage of contract up to 25% level. I need not go by POCM. Then, sir, can I book loss? No. Income is equal to expenses. Whatever, you need not book profit. That's all. Whatever is your expenditure will become your income. Early stage of contract. That is up to 25% level. The cost incurred will be considered as income. Okay, friends? Okay. Now, one more thing I want to speak about. There is something known as retention. The customer says, last 5% I will release only if the machinery or whatever you is performing well for at least 2 years. So I will release at the end of second year or third year as the case may be. So the last 2 crore will not be released by the customer. In the preceding erstwhile regime, the case went to court when this 2 crore has to be recorded as income. Since there is a risk involved, since there is no surety of its receipt, assessee will record it only in the year of receipt. So, retention money will not come under POCM at all, will only come under our cash basis of accounting. Will not come under POCM, will only come under, and that regime is over. ICDS has said even retention money will come under POCM. If it is not coming, later you claim the bad debts. Okay. Retention money should also be accounted on Okay. ICDS for revenue recognition. This is similar to accounting. Sale of goods when the risk passes on to the buyer. Interest on time basis, royalty, right to receive. Okay. A rendering of services. Okay. Percentage of completion method. Rendering of services, POC, percentage of completion method. Where the service period is less than 90 days. Where the service period is less than 90 days, full completion method. You need not account for it. Full completion method. Where the service period is less than 90 days, full completion method. Leja, please mute it. Okay. Where the service period is less than 90 days, you should account it on only. You need not, even if you start on March 1st, leave it. You account it on May 31st if it is less than 90 days. Where service are indeterminate, straight line basis. Where services are indeterminate, straight line basis. Where you don't know what percentage is completed. Where you don't know. 3 months prepaid card. How do you know how the user is going to behave? Indeterminate. So they say every month take equal amount as income. Where services are indeterminate, take it on straight line basis. Am I clear to you? Okay. ICDS 5, fixed assets. All expenses till the date of putting the asset into use should be capitalized with the cost of the asset. Borrowing cost till the date of putting the asset into use should also be capitalized. Borrowing cost till the date of putting the asset into use should also be capitalized. Am I clear? Okay. Uh, there is a miniature difference between accounting standard and this. In accounting standard, there is something known as suspension of activity. These 3 months, winter months, I will not undertake any work. My work gets suspended because there is always a risk. So 3 months, I don't undertake any work. Accountancy says whatever is the interest during that suspension period should be treated as income, revenue, and it should not be capitalized. Income tax till the date of putting the asset into use. That is the fundamental thing. And I don't know, I'm not very sure about accounting standard treatment. Suppose I get a loan and I'm not immediately using it. I keep it deposited and earn some interest. The loan is obtained for the purpose of asset and I earn some interest. Accounting says that interest should be adjusted with the cost of the asset. Okay. Income tax law, as you all understand, is very simple. No. For that you pay tax. Okay. That is separate. This is separate. Okay. Let's not club it. Okay. So that is also, those are all the two things which are slightly different in income tax law. Okay. Otherwise, then where there is exchange of asset, cost of incoming asset to be recorded. Okay. Foreign currency fluctuation. Friends, we have already studied this, so I am not repeating it. But you can write it as 43A and 43AA for our, when you get these notes, to get that, I am just placing here. I'm again placing, this is the same that has been, that's why I say it is getting integrated. Okay. In case of assets, it should be capitalized with the cost of the asset. In any other case, it can be treated as run. Okay. You just write, refer 43A and 43AA. That is more. This also we have written. So I'm just placing it. Okay. Towards depreciable asset adjusted with the cost of the asset. Non-depreciable asset, general subsidy. Year of recognition cannot go beyond year in which you have received. Can you please show? May I? Okay. In this, I'm writing one extra point. You can write it in your notebook as refer income. That's where we have written. Yeah, okay. Refer notes below section 28. So that's where we have written. And one additional point. In the year of refund of grant, the refunded amount will be treated as expenditure or increase the cost of the asset depending on how it has been accounted at the time of receipt. So, if the refund pertains to a depreciable asset, increase the cost of the asset. In any other refund, treat it as expense. ICDS 8 security applicable only for current investments, not long-term investments, only for investments held as current assets. Okay. Cost or NRV, whichever is less, is the basis of valuation. Okay. For the purpose of valuation, investments will be blocked together. Block means group. Similar investments will be grouped together and valuation will be on total group balance. Okay. Okay. This is the biggest difference between accounting and IAS 13 and ICDS 8. What is that? I have invested in the equity shares of company A, company B, company C. Accountancy says equity shares of A, cost NRV, whichever is less, B, C. Income tax law says ABC total, total cost, total NRV, whichever is less. It is not per investment basis, it is block of asset, like that block of investment. Investments of similar nature will be grouped together. Equity, shares of listed companies, unlisted companies, debentures, bonds, government securities will be grouped together, and comparison between cost and NRV will be made on group balance and not on individual balance. This is the biggest change between accounting and okay. Okay. We have studied this, so not spending time on this. Okay. This is what I explained. In accountancy, it should be taken as revenue, but here there is no concept of suspension of act. Yeah, sorry. Yeah, 10. This is the only beneficial standard for the assessing. However, where provision is made on the basis of past experience and on scientific basis, the same can be claimed and will not be treated as contingent liability. Where provision is made on the basis of past experience and on scientific basis. My dear friends, guarantee, warranty. I know for every 100 products I sell, one will be always an issue. 1% is I'm always losing. So make 1% provision that is on the basis of past experience and on scientific basis. Wage revision. I'm very sure every 3 years once I need to revise the wages to this extent. That's what my past experience says. Provide. Contingent assets, liabilities, and provisions. Take your time, generally read. Take your time, generally read. Am I clear? Okay. 10 ICDS. Okay. First, accounting policies, there is no question. Inventory, construction contracts, revenue recognition, fixed assets, securities, no, forex, forex, government grants, securities, borrowing cost, and contingent. Okay, will constitute in this. One adjustment will be on the basis of borrowing cost. I mean, ICDS. One adjustment, as the questions goes by, you will understand. One adjustment will be based on a quick answering of ICDS related questions. Let me go one by one. ICDS is applicable for all 5 heads? No. Okay. No. ICDS is for maintenance of books of accounts? No. It is for computation of income under income tax law, popularly known as income tax adjustment statement. What happens if there is a conflict between ICDS and tax law? Tax law will prevail. Okay, ICDS is only an subordinate of tax law. Okay, wherever provisions of ICDS and income tax law are not similar, then the provisions as per tax law will prevail over ICDS. Is ICDS applicable for income computed under presumptive provisions? No. 44 ADA does not have ICDS. That is 6%, 8% of turnover, 50% of gross reserves per vehicle basis. Okay, it has nothing to do with ICDS. Okay, where income is computed on presumptive basis, 44 AD and more, comma, book profits 115 JB and adjusted total income 115 JC. ICDS will not be applicable. Treatment of borrowing cost of inventory and fixed assets. I'll just copy it. Just now wrote it. Comment on retention money treatment. After introduction of ICDS, a retention money will also be accounted on percentage of completion method. So sixth I'm missing. Sixth, inventories are always valued on, sorry, cost or net realizable value, comment. Okay, generally true. But in the case of dissolution or winding up of the organization. In other words, if going concern is disrupted, then inventories needs to be valued only on NR. Percentage of completion of method is the basis of revenue recognition. Okay. In case of service contracts, this statement is true. However, where the total service period is not exceeding 90 days, then full completion is the method of recognition, and where services are over in not determined, then straight line basis. Or unable to be determined. Sorry. Indeterminate means unable to determine. Am I clear? Investors hold 1,000 equity shares of A and B purchased, NRV. Holds preference shares, purchased, NRV. Debentures, purchased, NRV. Value of closing inventory. Okay. According to ICDS, current investments needs to be valued on block of investment basis. First, let me do equity. Okay. Cost, NR. Equity shares of A Limited The cost is, okay, 1000 into 120. Purchased for 1000 into 120, 1,20,000. Is that right? 1,10,000. But the net is only 1,10,000. Accountancy will immediately say 1,10,000. But in income tax law, it is not so. B Limited, I purchased it for 1,30,000 and the existing market value is 1,60,000. Total 2,50,000, 2,70,000. Total 2,50,000 and 2,70,000. Okay. For the block of equity, cost or NRV, whichever is less. So I will value it as 2,50,000. Are you understanding the difference? Accounting would have said 2,40,000. Why? For A Limited, they would have said 110, 110. For B Limited, they would have taken 130, so 240. But whereas income tax law says, no boss, always block. Put all the assets of similar nature, investments of similar nature and come. Cost is 70. Cost is all here also 75. Yeah. NRV also. So look for block of investments. Am I clear? Okay. 10th question. Contingent assets are not recognized under ICDS. All contingent provisions are not allowed under comment. True. Contingent assets are not recognized. In case of provisions where it is made on the basis of past experience and on a scientific basis, it will be allowed. Am I clear? So these are all the provisions along with ICDS. Okay. A very quick recollection of some case laws. Chennai properties, okay, where the main object and the primary source of income is rent, then only PGBP. Otherwise, it will be only IHP. K and Co. deposits. Rama Multitech. Saurashtra Cements Limited. Okay, damages which is associated with an asset adjusted with the cost of the asset. All other compensations are income. Sivakami and Co. Beneficial ownership. ICDS Limited. Lessor can only claim the depreciation. He is only using the asset. Federal Bank, BSES, Yamuna. In both the cases, computers and accessories. Okay, accessory is one which is dependent on the primary thing. Then 40%. Otherwise, 15% for mobile phones. TVS motor replacement is never an asset. Come to 37. We divided it into penalty and capital expenditure. Oriental ceramics, glow sign boards are definitely revenue. PVR, if you incur expenditure, do not create an asset, then treat it as revenue expenditure for the existing business. Okay. A debenture issue is always a revenue expenditure. Issue of debentures, there is no specific provision. So revenue expenditure. Penalty, if you go, millennia developers, regularization fee. Okay. And this case laws related to medical industries, Apex laboratories, configuration of Indian industries, all those things. Okay. Those are all the main case laws. Maruti Suzuki Limited, where the person is a non-resident, income does not accrue or arise to him from India, then no deduction, no tax deduction. 43B, if you convert it into equity shares, it will be treated as settlement. And the Shawson Chemicals case. Okay, where in the Shawson Chemicals case law, they said that if you transfer it to an employee trust, and that employee trust should have distributed within the due date, then only you will be considered, then only expenditure will be allowed. Okay, right? These are all the various case laws we have seen. And there are some quick notes which we will be often referring. I told you I will paste it in this also. Okay. Along with that, we can go and answer first set of questions which are more of theoretical nature. recollection of provisions again. A company receives a sum of 10 lakh for agreeing not to carry on any business relating to computer software in India for the next 3 years. Tell me first. Any answers? That's the louder the answer. It is non-compete fee. It is non-compete fees. It will be treated as a business income. Okay. Any compensation in relation to business or profession including non-compete fee will be treated as business income. Section 28, direct provision. This is not even a case law oriented provision, direct provision. Second, sales secret commission paid. Yeah, this takes the character of illegal payment. This takes the character of illegal payment. Hence, it will not be allowed. CBDT. Sales commission paid to a non-resident agent who acted as an agent for booking orders from various customers who are outside India. Okay, this is what is that Maruti Suzuki case law coming into. Normally, any payment to a non-resident will be allowed as deduction if tax is deducted and remitted as. Where's your normal class? This? Okay. Yeah, yeah. Where do you normally have your class? Upstairs. Hmm, upstairs. Normally, any payment to non-resident will be allowed if tax is deducted and remitted. Okay, as per section 48. However, in Maruti Suzuki Limited, it was held. However, in Maruti Suzuki Limited, it was held where services are rendered by the non-resident wholly outside India and the non-resident does not have PE in India, then tax Then fourth, will section 43B get attracted for bank guarantee given by a company towards disputed tax liability? Maitli, I'll take your answer. I'll explain you the circumstance, Maitli. I have to pay tax. Section 43B says any taxes duty is a statutory liability which will be allowed only if it is paid within the due date of filing return. Okay. The government accepted bank guarantee. Okay. I'm unable to pay the tax, so I gave them bank guarantee. Can I claim deduction? What, Maithili? Can I claim deduction? Why? Any other answers? That's the word. Always remember 43B. To nail it into your mind, the word paid should be there. Whatever other sources, except equity, the recent case law. Otherwise, whatever you convert it into term loan, you convert it into debentures, you do anything, it will not. The term is paid. Okay. Section 43B specifies that to allow deduction, statutory payments has to be paid on or before the due date of filing return. The term paid means money outflow. Any other mode of settlement will not be considered. Shall I? Okay. Will section 43 be applicable for interest payable to GST department but not paid within the due date? Yes. No, first thing to understand, interest will be allowed. Only penalty will be disallowed. Interest will be allowed. Interest takes the character of tax. So whatever provisions are applicable for the tax are applicable for interest also. Interest is normally computed on tax. Accordingly, it is interpreted that interest will have the same provisions as like tax. According to section 43B, tax needs to be paid within due date of filing returns. The same will be applicable for interest also. Never be allowed. Income tax is a separate provision. Interest on loan taken for income tax also not allowed because it takes the character of interest on income. Can the successor of business write off debts which are incurred by predecessor of the business? Super. Okay. So what is succession? Amalgamation, demerger, three types of conversion. Sole proprietor into company, firm into company, company. In all the cases, as Archana was telling, provisions will apply to the transferee entity as it would have applied to the transferor entity had the event not happened. If they have not claimed bad debts, they can claim. Suppose X Limited has claimed bad debts. Y Limited is recovering it. Taxable in the hands of Y Limited as income because had X Limited recovered it, it is an income. Okay. Yes. Successor can claim bad debts for the unrealized debtors of predecessor. In the event of succession, provisions will apply to the transferee entity as it would have applied to transferor entity had the event not taken place. Paka clear? Okay. So successor can also claim, that is the provision. Answer the next question, please. The next question is yours. Answer. A small correction. That's a small correction. Okay. The company got a loan at 12%. The interest rate is 12%. 1,10,000. Correct? Hmm? The company borrowed 70 lakhs at 12%. Okay. The borrowal should be on 1st April. Ready to use is on 1st December. The borrowal is on 1st April. Ready to use is on 1st December. So $10,000 into 4 rupees. $89.60. Clear? Okay. Online students completed. Are you clear? Yeah, sure. May I? Dynamic Limited, an Indian company, took on lease a commercial premise for its operation. After some years, the company decided to vacate the premise and relocate to a new location. However, dispute arose with the lessor regarding the terms of vacating. To resolve the dispute and avoid prolonged litigation, Dynamic Limited agreed not to claim the security deposit of 3.54 crores, which it had initially paid the lessor at the start of the lease. Whether the amount of security deposit foregone by Dynamic Limited allowable as deduction? Any answers? Online friends? Nega, what's the answer? It is a, yeah, yeah. Bad debts, it is allowed under section 36. Whereas bad debts is I sold the goods, where at that time I recorded it as income. When I am not getting back, I can claim. Rental deposit, it is not given when I, okay. So this will not be treated as expenditure. It's a, as our friend was saying, foregoing of a capital liability. Mahele Filters Limited. Okay. Yeah. Oh, yeah. Was settled by issue of debentures. Sorry, it will not be allowed. Okay. Sorry. Um, Section 43B uses the word paid unless it is unless the liability is paid, expenditure will not be allowed. conversion of interest into debentures is not regarded as payment. So the expenses will not be allowed. However, in the year in which debentures are redeemed, expenses can be paid. Going to the next question, friends. Examine the taxability or allowability or otherwise the following cases while computing income under PGBP to be declared in the return of income. Power subsidy received. Donation received by a person in the course of carrying on vocation from his followers as business income, right? Do you remember the case law by any chance? It's not a recent case law, don't worry. Nityananda. He said, this is for my Vedic disclosure. Court. Okay. Shall I? Interest received by the contractor on the amount of compensation awarded by an arbitrator for resolving the dispute relating to work done. Friends, This is also not your recent case law. This interest is closely related to your business or profession. Remember, though the next question comes again, okay, in K and Co, they said one philosophy. If the interest is on surplus funds deposited, I accept IFOS. If the interest is interlinked to your business, let it be bank guarantee, share application money in Ramatech, in this case also, it is directly related to your business. Interest received on the compensation resolving the dispute with regard to work performed. So this interest is directly linked to your business. So it will be considered as business income. Interest on margin money deposited for the purpose of obtaining bank guarantee. In K and Co, it was held that such interest is taxable under PGBP as the bank guarantee is obtained is directly linked to business. TDS under section 194C for resident transporter, where the resident transport agency provides PAN and declaration. They will not say what declaration, but the declaration is they are going under 44AE. That is, they don't own more than 10 vehicles. Okay. Then tax is not liable to be deducted under section 194C. So non-deduction will not be disallowance. Okay. Right. Like this, what is the other provision for transport operator is that 35,000 limit instead of 10,000 in 40A3, 35,000. For job worker, okay, where raw material is supplied by customer or any related person of customer, the job worker is only processing the goods. Hence, section 194C is applicable. It's based on raw material, where customer merely places order, job worker procures raw material, then it is sales, and section 194C is not applicable. TDS on purchase of software. Section 194J is applicable for purchase of software, and non-deduction will lead to disallowance. However, where the software is purchased with the intention of reselling, then it becomes goods. And where the software company provides a declaration that it is already tax suffered, then TDS provisions will not apply. Two cases it will not apply, where it is used as a goods purchased with the intention of reselling. Two, where the software company, Adobe, if you are buying the Adobe, in that they will say, you have already been taxed. You are only purchasing from an agent. Already the tax has been suffered, so you do not deduct again the tax. We are continuing to answer now comprehensive solutions. Take time in reading the question. Take your time in reading the question. That will only help you to answer it better. The profit and loss account of Messrs. Suchitra Food Specialities Limited disclosed the net profit of 79,40,800 after taking into account the following. Compute taxable profit. The company has been split into various departments. During the previous year, the company closed down its soft drink unit due to lack of profitability. Employees had to be paid severance cost of 12,70,000, which was debited to P&L. Is it allowed? Is it allowed? Parvesh, it's allowed? Any other? Online friends? Is it allowed? Bharati? Yeah. Yeah, I take the answer of Divya. It is allowed. My dear friends, if you recollect my discussion, VRS versus retrenchment compensation. VRS split over 5 years, you can claim it. Okay. VRS can be claimed over 5 years, whereas retrenchment, you can claim it in the year of incurrence. Training expenses paid to a joint venture company. Okay. So what provision they are testing me is 40A subsection 2, payment to a relative. Have I paid within since they have not said anything, we should assume that they have paid as per the fair market value allowed. Okay. The company paid 2,45,000 fees of director's son for higher education by entering into an agreement with the son of the director that after the course he need to serve the company for 5 years. Yeah, very good. XJ4 Jings, where director's son is the only or first beneficiary, it will not be allowed. It will not be allowed. 11 lakh commission paid was paid by the company to its director, as the director has given personal guarantee for providing finance to the company. Allowed. He is doing something more. In IFOS, we will read this case law. Pradeep Kumar, it will be allowed. Company has incurred 9,40,000 towards replacement of dies and molds being part of plant and machinery and treated it as current repair. No, this is the word keyword. Okay, TVS Motors allowed. Replacement does not bring a new asset into existence, so it is allowed. Depreciation as per books, depreciation as per IT law. The company has incurred 8 lakhs on issue of convertible debentures. These debentures are to be converted after 5 years. Allowed. ITC. There is no specific provision which says that debenture interest should be, debenture issue expenses should be amortized. Company has accumulated brought forward loss of 16 lakhs for soft rank unit. You can claim it. You can claim it. Let's go from the top. Computation of taxable business income. Net profit as per profit and loss account. Yeah, sure. Now it's better. Okay, right, friends. For every adjustment, we should write the note. For every adjustment, it is communicating to the examiner. I know what you are asking, and I know what the provision is. Severance cost is incurred in the normal course of business. Only VRS compensation needs to be amortized. Retrenchment compensation can be claimed. Please write a detailed answer. From the classroom, we are practicing so that it goes up to examination. Take your time and write the detailed answer. I'm particularly saying this because of one biggest reason. for 2 years, 2.5 years of your articleship or 3 years of your articleship, you have always used the laptop. That writing habit would have gone. So majority of our friends, what they say, they are unable to complete the paper because that speed is lost. You would not have this complaint in inter, but in final you have this as a complaint because the writing speed is lost. Let's practice it. Let's get it back. Am I clear? Okay. Payment to that. If friends, if I am fast, if I am not giving you time, please stop me. Do not even hesitate. Online friends also, please don't hesitate. Okay. And also, I request you to please write it, especially online friends, because I'm unable to see the notebook. The simple thing is, obviously, I'll share the answers with you, but that should not give you lethargic practice. Okay. In XJ Forgings Limited, it was held that if such training expenses are already incurred by the company, the same will be allowed. Where director's son is the first or only beneficiary, it will not be allowed. Please mute the mic. Clear, friends? Clear? Okay. Paka? Okay. Add always book depreciation and are you understanding? Okay. In examination, state the obvious. You will feel it's very simple, but always right. State the obvious. That is the rule. Completed. Can I proceed online, friends? Anybody yet to complete? I'll wait. Sorry. Business income. I missed an adjustment. Brought forward business loss according to section 72, loss of discontinued business can also be brought forward and set off. 68 lakh. Right? RST Limited is engaged in manufacture. Two special provisions are there. One is additional depreciation. Another is a manufacturing company can incur skill development expenditure. Except land and building, it will be allowed. So whenever we read manufacture, we should remember this. And also, if they are following the concessional tax regime, both are not there. Sale of drugs and pharmaceuticals. Its net profit after debit or credit. A. Income tax paid on non-monetary perquisite. All types of income tax disallowed. Legal fees for defending the title of the factory building. No issues. Expenditure on scientific research, in-house research and development. Interest paid on arrears of GST. Allowed. Only penalty is disallowed. Interest is allowed. Cash payment of 60,000 made on 10th October to a supplier towards purchase of raw material. Of this, 30,000 pertains to the invoice recorded in 24/20. Very good answer. So the 60,000 is wholly added back in two provisions. 30,000 current year expenditure, there is a violation. It is expenditure disallowed. Second, as she said, the other 30,000 is last year expenditure, this year violation. It should be treated as income. Both are added only, but we should do it under two provisions. Amount payable for using railway wagon facility, out of which 650 is paid in September, balance is November. Only 650 is allowed. This is 43B disallowance. Rent received from vacant land is taxable under IFOS. Yeah, okay. Arrears of rent received in respect of a house property which was let out in earlier year, not chargeable, 2 lakhs. The said property was sold itself in 24/25. Still, the arrears rent received is taxable. Okay. The company had paid royalty to a foreign company 3 lakhs in the financial year 24/25, which was disallowed in that particular year since tax was not deducted thereon. The company deducted and paid the tax on 1/1/26. This year you should allow it. This year the default is rectified, allow. Brought forward loss pertaining to house property 40,000. Compute the total income. Read it, we'll proceed. Yes, friend. Yeah, I'll look into it. Question number 39. Yeah, can you show me the answer of question subsection? So, okay, 6 and 9. Okay. In question number 41, depreciation as per books is already included in the net profit as per P&L. Then why we are again including only net depreciation is added back, right, sir? Okay. Sneha, for the depreciation question, I am answering. Net one day I have added back. What I have done? 16 lakhs added, 14 lakhs reduced. So the net is 2 lakhs added back. But that is how it has to be done. Depreciation as per books has to be fully disallowed, added back, and depreciation as per IT law should be reduced. That is the way in which it has to be done. Answer for question number 39. What are all the parts you want? Question number 39. So question number 6 and 9. This is 6. Arrears of high HP. This is 9. Mahili filter. No problem. Thanks to Lija for helping us. Thank you. No. Thank you, Lija. Yeah. Yeah. Progressing to this question, let's start answering. Let's start answering question number 42. $28 lakh. According to section 40A, any income tax on non-monetary purposes will not be allowed as deduction. Wherever there is no specific provision uh, incurred in the normal course of carrying on business. Expenditure on scientific research. In-house research expenditure other than cost of land is allowed as deduction under section 35 since it is already debited. Okay. Section 40A subsection 3 disallowance. Expenditure in excess of rupees 10,000 paid otherwise than by approved modes is only 30,000. Is only that current year expenditure paid otherwise than by approved modes. Okay. The next is the next immediate one more A, section 40A subsection 3A, where the expenditure is accounted on mercantile basis but paid during the current year, violating 40A subsection 3, the amount paid will be treated as income. Another 30,000. Take your time. Am I clear? Amount payable for using railway wagon facility 9 lakhs, out of which 6,50,000 is paid in September and balance in November. Payment to Indian Railways for usage of asset is falling under statutory payment section 43B. The same has to be paid on or before due date of filing a return. Hmm? What is now the taxable business income, right? Can you tell me the amount? 20? 1 minute. I'll from the top I'll come. Okay. 28 lakhs plus 1 lakh. Did I go to the previous question? No. 28 lakhs is the profit, right? Plus 1 lakh plus 60,000 plus 250 minus 1 lakh minus 2 lakhs minus 3 lakhs. Shall we? Okay. Continue with computation of total income. House property. arrears of rent received is taxable in the year of actual receipt, even if the property is transferred before that date. Section 25A. Arrears of rent is taxable in the year of its receipt, even if property is taxable. Okay, 2 lakhs. Standard deduction at 30%. Remember, standard deduction for house property is 30%. $60,000. Brought forward HP loss, they say some 40,000. Am I clear? Okay. We'll continue in the next class, friends. Okay. Uh, I, I have an appointment at 9:30. So if I start, it will spill. That's why we'll continue in the next class. On Wednesday, we will complete PGBP if time permits, introduction of. All the best, friends. Happy Diwali to all of you. Happy Diwali. Okay. For the, thank you. For those who are coming to class, they will bring me sweets. For those who are online, you can dance so many sweets. All the best, friends. Happy Diwali.